What's going on, everyone? I hope you guys all had a decent trading day today. So today was a little bit of a weird day. Started off a little bit choppy. We didn't really get a lot of big moves. Overall, the stock market as a whole has been on like a 2-day rest. So what I think we could be going into a a 2, 3, 4, 5 day distribution period where some of the stocks that were, really reclaiming the 50-day moving average coming off the bottom, pull back in, allow some of the other stocks to get pulled up, and then kind of accumulate more buyers, consolidate a little bit, allow for a little bit of profit taking off of the bottom. Reason why we're speaking on AMD. So AMD had earnings today. We did beat on earnings. However, guidance was a little bit not what the market wanted to hear. With that kind of being taken into context, AMD had a nice little intraday run up into earnings. So again, some of you guys who like to play earnings, I'm not a very big earnings guy. I don't have the luck for it. Stocks can go up, stocks can go down. But what I do like to play a lot when we do have earnings is that intraday run up, right? So sometimes you get a lot of institutions, or you get a lot of big retail traders that like to run the stock higher into the anticipation that they are going to beat or the stock is going to explode. So I definitely sometimes like to take advantage of that. Just kind of keep that in mind. Maybe if you're interested in playing earnings, maybe start off playing the intraday run-ups instead of having to hold that position overnight, because obviously we know these things can do whatever they want in the after hours session, and IV can kind of really eat that premium up. So if you're looking for a different kind of way to play earnings, that's a way to play earnings. With that being taken into context, what I do want to look at here is, when we had that little intraday run up here, we kind of ran right here. And if I can zoom this in so everyone can see, if you see this yellow line here that I'm kind of dragging my cursor across, this is the 200 EMA, right? The exponential moving average. It's the 200-day EMA here. We tagged this to a T. Now, one thing that I do kind of want to point out, sometimes you might look at some of my videos and notice I have a lot of indicators and a lot of moving averages all over my chart, right? The reason why I do this is because I want to take trades where I've got the most amount of potential, right? So it's wherever the stock has the most amount of room to kind of move higher or lower, that's where I want to take my trade. If everything is really stacked and really tight, I don't really want to be involved in that chop factor. You can see here this last supply zone, right, which was the 100 EMA as well as the 100 simple moving average. You can notice that if we were to get over this price action, which we did on the 29th of July, that we had a lot of room to run. So if you were simply playing this supply zone here, all you were looking for was a confirmation over this price of 94, and essentially you could have swung this trade all the way up into a price of $99. Now that's a fantastic trade depending on your position sizing. Even if you're only playing a handful of contracts, it's still a very good move. Now always remember, when you're playing short-term trades, whether it be a day trade or a swing trade, you always want to play as close to the money as possible. So I would never recommend someone, trying to play a $94, $95 break and then buying like $105 calls, right? Now, will those calls increase in value? Of course, but if it does, if it never makes it there to that next destination spot, which the market doesn't have to, and it pulls back, you're really going to be at a loss. And then while you could have taken those in the money, at the money contracts, like, say you have another trader who's buying an at the money call as soon as we kind of cleared over this supply zone here, they're going to be able to start profiting a lot sooner than you are. And those little bit of pullbacks aren't going to really kind of sway them off of the position. Whereas in your case, you might be in the red versus someone in the green. I hope that kind of makes sense. But what I'm looking at here, obviously our next supply zone, this is going to act as a heavy level of resistance. So as soon as we're able to get over that $101 range, I would expect AMD to put in a next push towards 104. That's the trade to the long side. Now, getting to earnings, we obviously know that we have pulled back in earnings. We are currently trading at $93 and around 50 cents. So what I do want to show you here is, even though we do have a pullback, structurally nothing has changed on the chart. We are still well over the 50-day moving average. Now the 50-day moving average is going to be your perfect indicator of whether you really want to be sitting long or sitting short on a particular stock, and whether you want to be looking to day trade to the long side versus the short side, right? So the 50-day moving average is sitting here at around $88, $89. And if we kind of look at where we're at 93, you can see that we're actually right here at 93.42, which is the linear regression channel 50, right? So these are channel levels here. And if you can see this blue line on my chart, This is exactly where we stand now. Okay, so one of two things are going to happen. Either A, obviously we're going to break through this, and that will provide a short opportunity for us to take advantage of some put options, maybe to the downside, or whether you're playing equities and you want to short the stock. Anything below 93.42, definitely, if it stays under that, has maximum potential to $91. So that's going to be a fantastic trade. You can see we have no support until we get down here to around 91. Now, it never has to tag it to an absolute pinpoint, but just start to take profits on the way down. Depending on your position sizing, you can start scaling off those options contracts or start scaling off some of those shares if you do decide to go short. If we were to get back over the daily 5-day moving average of around $94.45, then the short play is out of business, right? We have to disengage with that play. We don't want to get trapped and have this thing run all the way back up on us and lose a bunch of money. So that's how you're going to play your stop loss position there. But we could also chop around here quickly, maybe in the pre-market wash out. And then as soon as we start to open, maybe we open in the middle of the range. So those are the hardest trades to kind of navigate. For example, let's say that in the pre-market, they do run it past 93.42, and you're kind of looking back and you're thinking to your head, well, I remember when he said that if we get below 93.42, that we could potentially come down here to 91. But let's say we open up at around 92.27. Are you going to want to short something that's in the middle of the range? Because if you take a short position here and it quickly, within the first 10, 15, 20 minutes, wicks down here and then spikes, now you're going to go into a drawdown very, very quickly. And if this 10-day moving average does act as support, you will get stopped out of that position. So this short play is only valid if we stay over that $93 area. Let's just call it $93 for the sake of the video. If NVIDIA opens higher than 93 and we lose that area, that is a short position into 91. Now, if we hold that area and let's say we open in the middle, or let's say if we lose this area overnight in the pre-market, and let's say we open up in the middle of the range, this is not where I'm going to want to take a short position because I do not want to get trapped. So what I will do is wait at least 30 minutes to an hour after the market opens. I'll see if we can kind of find some support. And if we find some support here off the 10-day moving average, I will flip to the hourly time frame and look to see if we're going to bounce. As soon as I get one of those hourly candles to take out the previous hour candle's high, and I see that we bounced off the 10-day moving average, I can try my luck here at bouncing this play off of rising support, and I will use the 10-day moving average as my stop. That's exactly how I'm going to be navigating AMD for the rest of the week. I hope this video makes sense. If you guys are really interested in learning how to trade options on a day in and day out basis, maybe you guys would like to trade with me personally or get access to my watch list or my full trading strategies, definitely visit evolutiontraders.com. Become a gold lifetime member, and I will get you guys all set up and situated. I look forward to working with some of you guys. Again, I only take on 2 to 3 new students each and every single month. That's just to better help me serve you. With that being taken into account, I'll see the rest of you guys back here on YouTube tomorrow. Make sure to like, comment, and subscribe, and I'll catch you guys all later.